Hey, Rent to Retires, it's Adam Schrader here today, and today we're going to talk about why sometimes you need to stop following the rules of thumb. Alright, before we get started with today's video, let me remind everybody, please subscribe to our YouTube channel, click the notifications bell, and don't miss out on any of these videos we're putting out as we try to make you the best investor you can possibly be. We really appreciate the responses we've gotten from you, as well as the education you have as we talk with you on the phone and discuss your real estate journey. At the end of the video, if it's been helpful, please click the like button as well. Let us know that it was helpful. And also, as always, if you have any questions or any other topics you want us to cover, enter it in the comments below, and we will get to it as soon as possible. So, I talked about rules of thumb in real estate a few months back. We talked about the 1% rule, the 40% rule, all of those things. You can go back and watch it if you want. But what I want to talk about is how conditions change over time and how our rules that we follow need to change as well. Because we have a lot of people, real estate investors, or maybe potentially beginning real estate investors, so they haven't started quite yet, who see the numbers that are available now and won't move forward based on what happened in the past. And this happened a lot earlier, 7, 8, 9 years ago, whenever you had numbers that were coming out after the Great Recession, where you could get, a 2, 3% rent to purchase price. You could get a $50,000 home that could rent for $1,000 a month, or $1,200 or $1,500 a month. Those deals were available. And then we got to the point where, okay, you can't look at the 2% rule anymore. You have to look at the 1% rule because home values had started to increase and they were catching up to rents. So now your $50,000 home could only get $500 rent, and if you wanted $1,000, you had to buy a $100,000 home. Well, guess what? Real estate changed. COVID changed a whole lot, and now interest rates are changing things as well. Now, we've talked before, and I will continue to tell you that interest rates are not high, but they are 100% higher than they used to be a few months ago. Things have not fundamentally changed. The fundamentals of real estate have not changed. Those are still fantastic. Looking forward in the future, inventory is still low, prices still have upwards pressure, rents still have upward pressure. We have a lot of stuff going on that leads itself to say real estate is going to be successful for the long haul. But as an investor, our mindset needs to change because more than likely, for the next 1, maybe even 2 years, the 1% rule is not going to work because as values and interest rates go up, rents are going to be trying to catch up. They're going to be keeping up as much as they can. But we're already at an environment where 0.75, a 0.8, rent to purchase price will get you a solid positive cash flow. So you really are going to have to start looking past year 1. Look to year 2, look to year 3, look to year 4. Remember, this is not a short-term investment. If you're doing short-term investments, 6, 9, 12 months, that you should be looking for distressed properties that you can rehab and flip. That's not the kind of investing we're looking at doing. We're talking about good long-term investments. So if it's a long-term investment, you shouldn't just concern yourself with year 1. You need to go through and look at your mortgage payment that you're going to have and then add 4% or so, maybe even more if you're in the right market like our Cape Coral market. Maybe add 4, 5, 6, 7% to the rent yearly for a few years and then maybe dial it back to 3% or 2%. But you need to start looking at those numbers as well, because as you look at those numbers, you're going to see what real estate can do for you over time. I remember when I first got started, I would look at people who were saying they were getting $300 or $400 a month cash flow on the property and say, wow, they started at a great time because I can only get, $220 a month cash flow. Well, guess what? They were getting that return because they had been investing for years. Now, those properties that I had that were cash flowing $220, now they're cash flowing $400, $500 a month, somewhere in that range. So over time, your deal will look better and better and better. I look at my cash on cash return every single month. And every single month, I see my cash on cash climb Some months, obviously, not quite so much if there was a repair that needs to be done. But over time, it's gone from, 8% that first year to now being 24, 25, some cases 35, 36. And this is just cash on cash that I put in as I track my mortgage payments and my rent payments collected. So keep that in mind. It is continuing to increase. Your returns get better over time. They are not fluctuating as much as it is in the stock market. They are solid. They are consistent. So start looking past year one, because year one is only the beginning. You talk about, coulda, shoulda, woulda when it comes to investing. Well, guess what? A year from now, 2 years from now, I can't guarantee you the numbers in terms of rent to purchase price, in terms of the cash flow, will change. But I can guarantee you that having that locked in price, having that locked in payment for 30 years, even though most likely you're not holding this property for 30 years, but having that locked in payment allows your cash flow to continue growing as you are able to increase your rents. And rents have gone up 79 out of the last 81 years, as we've discussed previously. The only 2 times they went down, remember, nationally, were by $6 and $11 around the time of the Great Recession. So take that for what you will, but in my opinion, it is still a time. Rising interest rates, yeah, it kind of stinks, but it's also kicking people back into the renter pool and just strengthening our rents on the whole. So don't fear, get in there, get started, keep going, whichever one applies to you. And I look forward to talking with you if you need help with your investment journey. You can find us at renttoretirement.com. That's renttoretirement.com. You can see all of our inventory there. You can schedule a call with an investment strategy like myself, and we are happy to help you out as best we can. Again, that's renttoretirement.com. Like the video, leave a comment below. We'll get to it as soon as possible. Really appreciate you spending the time with me today. I'll see you on the next video.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.